All right, so welcome to Gameplan Sunday. Today is October 6th, and we're here with our game plan strategy session here with the Wall Street Jack boys. We're going to take a look at the markets, what occurred over the past week. We're going to take a look at events that's currently ongoing, events that's currently that's going to be coming here in the near future. How is this going to shape up the markets? How can we navigate and make money in all these situations with all this data, all this information? What's going on? We're going to talk about it. There's a lot that occurred over the past week. So I'm going to try to knock it out as quickly as possible, but bear with me because we do have some key information that I think you guys should be aware of and that you will find great value in this. So with that being said, we'll go ahead and get everything popping. This past week, what occurred? Well, we had some key economic data that was released this past week. As you guys know, the whole overall markets were down for the majority of the week because we had some really, really bad information. In fact, I believe all the news that's been coming out has been actually pretty bad, okay, as far as the data that's been presented. So the key piece of information that was released this week was the PMI numbers, okay? We had PMI manufacturing numbers. We had PMI non-manufacturing numbers, which is basically the service industry there that were released. And then we had the employment numbers that were released as well. So we got the jobs numbers that were released. As you guys looking on my screen here, I track all this data and I'm manning it and, trying to deliver it to you guys so that you can understand what's going on. So when you're watching your CNBC and you're watching whatever, financial market news that you guys are watching out there, CNN Money, Yahoo Finance, those are all good things to subscribe to. But majority of you probably have no idea what in the world is going on. What are they talking about? And I think that is information. And trust and believe me, Wall Street Jack boys, we are the very best stocks and options trading platform that's out there. Because I'm going to tell you why. This information will save your life. The information that we deliver, we talk about trading stocks. We give you the setups in place. We train you. All of that is in the courses at wallstreetjackboys.com. But furthermore, what we do is actually give you the wisdom. And that's what you don't get from the other gurus and everybody else out there. They talk trade. Well, there's a time to be trading. There's a time not to be trading. You got to understand how this works, how this financial markets work, how the economy work, how they all sync together. And so right now we're in a very trial time right now with the state of the economy. Okay, so you got two different things that's going on. Well, you have lots of things that's going on. All right. So for one, you have the trade war with China. That's the biggest risk to the markets right now. Okay, trade war with China, and it's having a negative impact throughout the financial markets. As far as corporations go, it's hurting their profits. Their earnings are dwindling severely. Okay, we're seeing that happening now. Earnings are dropping now. You guys seen the stock market raise up real high this year, and that's thanks to President Trump's fiscal policy, tax cuts. That was the stimulus for these corporations on the books. You're either cutting expenses or you're generating more sales revenue to please Wall Street. Okay, and that's where we're making our money here, on Wall Street in the stock market. And so a lot of the companies, they're not generating that sales growth. They're able to actually save a lot of money from the tax cuts. Now that actually looks good on the books. Shareholders like that, and a lot of them are actually taking that money instead of reinvesting it into the workforce. They're actually doing corporate buybacks, share buybacks. So if you're not a shareholder, you're not a stockholder, you're just not going to benefit for all this rise that's in the stock market world. OK. And basically your 401ks, your IRAs, all those things should be looking pretty good right now. But we're at a pivotal time that we believe that from the data that we're seeing right now, that the party is over. OK, we did release an article here not too long ago, about a week ago, on our website. And I'll pull that up for you guys real quick. That article. Let me just flash you guys with that real quick, then we'll take it back off. But I got to show you, so that you have context. This is the website, Wall Street Jack Boys. Not familiar, get familiar. Spread a good word out there. All right. So I'll take that. And then you just go here to the blog section. This is free. You don't have to be a subscriber to go to our blogs. It's all free. Okay. And I'll drop the link here in the chat for you guys that want to click on that link. But the blog here, as you guys know, we dropped the gold is real money. You guys really need to understand that if you don't understand money. And today, the world is not ending, but a recession is on the way. This is the new blog. So you guys definitely need to check that out. Lots of wisdom that's in this blog here. But We have to bring in context where we are in the economic cycle. Where are we at in the debt cycles? This is what helps guide this will help guide our money, the flow of money, our decisions with investings, all of that. Whether you're buying homes, what's a buyer's market, what's a seller's market, all of this is relevant. You don't have to be a trader to get value from what we're actually delivering here. Okay, this is school. I'm teaching you right now, tuition free. This is free for everybody. Okay, and yeah, make sure you guys hit those thumbs up buttons. You know, share this post, create watch parties, whatever you got to do to get this information out. All right. So this is the new blog. Make sure you check it out on the website, of course. So how do we come up with this conclusion that a recession is coming? All right. So it's key data information that we are looking at. Key data. Okay. And if you guys look at all these pretty colors that's on my screen, all these blue charts and stuff, this is what we're tracking. Now, there's lots of economic indicators, but these are some really, really good indicators. And these are the indicators that I track. And this will give me insight of what's going on in the whole overall economy. This guides my decisions with trading, you know, whether I'm bullish, whether I'm bearish. I'll try to zoom in just a tad bit more so you guys can see this stuff a little better. All right. All right, cool. So what's going on in the economy? All right. This past week, we had the PMI numbers that came out. Here we go. I'll be teaching you guys. I'm telling you guys, you're not on the Instagram page. Make sure you go to the Instagram, subscribe to the Instagram, like everything that's on there. On the Facebook page, you do the same thing, okay? Share this. So PMI numbers were released this week. What did we learn? Okay? This is what you need to know. With the PMI numbers, this is the manufacturers, okay? You got to understand, when the manufacturers, when they're ordering the raw goods, the raw supplies that they need to make stuff, okay, whatever it is that you need to make, whether it's this jar that I'm making, you need, you know, sand, glass, and all that stuff so you can make stuff. So we're looking at the orders that they are actually filling. The orders, what are they buying? This is their investing and their purchasing, what they need to keep things going. Now, this is a benchmark, which is 50, okay? This red line here, you guys can see going across the chart, but I just hit it with this yellow arrow. This yellow line is a key level that the big dogs are watching, okay? We're not talking about trading, you know, retail traders like myself. We're talking about institutional, you know, traders, you know, companies, the JP Morgans, the Goldman Sachs, everybody, big dogs, okay? That's what's running the markets. But anything you get above 50, okay? Above 50 says that the economy is growing, okay? If it is under 50, that means that the economy is contracting. That's a big word. Let me just tell you, they say slowing. It's slowing down, okay? So the economy is slowing down. And when the economy slows down, it normally will slow down into a recession, okay? So, but this is just one part of the economy, okay? This is the manufacturing sector. So you guys are got to understand the basics of survival is producers will always outlive consumers. Understand that. So manufacturing is what are we producing here in America? What are we producing? The manufacturing jobs. That's what the middle class used to be made of. Now we're in a servicing economy. So service jobs, you know what I mean? Your people are driving Uber cars. You're servicing people. You're working in McDonald's. You're serving people. Okay. You're working at the movie theaters. You're serving people. That's not making nothing. Okay. When we're talking about making things, that sector it's in a recession. Okay. This is recession levels. Okay. You see that? We just got these numbers. Okay. Now for the whole year, you guys can clearly see that it's been going down, trending down. The whole year it's been trending down. All right. So because it's trending down, we know. And again, this is a leading indicator. This is giving us insight into the future. What's coming in the future? We're seeing more slowdown because, again, if the companies are selling more, then the demand is higher. That means that, okay, people want what they're selling. So they're going to need to order more raw goods so they can produce more goods. Okay. So when we see that they're pulling back, they're slowing down in their orders and it dropped beneath this 50 level. Now, this is what caused the markets to sell off this week. Okay. Because, I mean, we already had the bad numbers from last month, but it was still kind of close. You guys, it was 49.1. You know, it's a little close to 50. Not bad, right? 9 points off. But when you get it consecutively, and then this actually, I think the consensus they were actually optimistic. Let me be right. They were optimistic. The economists were thinking it was going to be above 50. And instead it ended up dropping down to 47.8. That's over like 3 points, right? And so this was this is a really bad signal for the economy. Okay, because again, this is telling us that they're not selling as much. The corporations, the manufacturers are not producing as much. They're slowing down on their investing. They're slowing down on everything. Okay, we're seeing it now. Some of them are actually cutting their workforce. We'll go over some of that as well. But some of these jobs are actually they're cutting and laying off right now. Okay, so PMI number, this right here, we just got that one. Okay, that was this week. I believe it was it Monday or Tuesday, and then Thursday we got the servicing numbers about the service economy, and those numbers were bad. So again, these are all bad numbers. Okay, and then the end of the week we got the jobs numbers. Okay, so the jobs numbers you guys can see right here. Let me just go into my pen here. So we had the jobs number, jobs growth, and this is what we pulled out the economy. This is what the economy produced, 136,000 jobs. Now, if you guys are on the Instagram page, then you would have got this, or if you guys are subscribing to the Facebook page, make sure you turn on your notifications. Man, Facebook be hiding all the good stuff for you guys, because even if you like the page, you follow the page, if you did not turn on the notifications, you will miss the value. Trust me, as my man Wes says, if you turn on, well, you need to turn on Wall Street Jack Boys notifications on your Facebook, because your timeline will thank you. With all the garbage that's on Facebook, you guys are not getting the information that you need. You got a bunch of people who are running around thinking they know what they're talking about when it comes to the financial markets, when it comes to the economy. They have no idea. Okay, so this is the truth. This is the real. Make sure you share this. Okay, I need for you guys to get it. Okay. All right. So check this out. If you were on an Instagram page or a Facebook page or in our group on Facebook, you will saw that these two numbers, again, every time they release these reports, they revise them. Okay, they revise them. That means the first numbers, okay, the blockbuster numbers that we get that Wall Street goes crazy over are not real. They're fake. Those numbers are always wrong. They always come back and revise them month over month. The interesting thing is that when they revise, they normally revise lower, because again, they're normally over optimistic on the numbers. This is manipulation. Okay. Now, the thing that was crazy about this time around, they actually revised these numbers up. Okay. And normally they revise them down because they're overly optimistic. And these jobs numbers, you got to understand, these are just surveys. So a lot of people don't really understand the context of the data when you get it. And so it's easy for the public to not understand, what's going on when you have, like the president will say, oh, jobs are great, or whoever's saying that the jobs is great, but you don't have no context of what those numbers are. So that's what I'm going to try to show you guys real quick, so you can understand how this stuff really works. Okay, so these are surveys, but interesting thing is that they revised these two numbers up. This number missed and this is the current number, but for some odd reason, Wall Street rallied. Okay, the stock market rallied. People started buying stocks. Now, how in the world you get two PMI numbers, service and manufacturing, terrible numbers, and then the jobs number come out and that's bad? Okay, that's dropping as well. Well, I guess if you net it all out, all of these numbers together is not as bad. So I guess the stock market is being irrational right now. We're seeing a lot of irrationality that's going on in the markets, and it makes it tricky to trade in this environment and to call direction, because the markets are irrational. Okay, we're seeing it here. There's no reason why you should rally if your numbers are going down. Now, you got to still keep in mind that this is still growth. Remember, this is growth, but the rate of growth is slowing. Okay, so we're seeing all these numbers are slow, and it's hey, we'll take any kind of growth, right? So anyway, those numbers were all bad. The unemployment rates actually went down. I haven't updated this yet, but I think it went down to 3.5, which is the lowest that we've seen since 1960 something, since NASA was sending people out to the moon, right? Somewhere down here, and I haven't updated this one yet, but that's what was the unemployment numbers. Now, you got to understand, how did they come up with the unemployment numbers? Okay, so these are surveys, and these surveys are basically people that what's good, you guys? Let's see. So basically, these surveys are people that's been looking for work in the past, couple of months. Okay, if you haven't actively been looking for work, then you don't even count in these numbers. So you got to understand that they're not counting everybody, because you have people that are not motivated enough to even go look for a job because the jobs are not paying enough money. Okay. When the jobs not paying enough money, people ain't even motivated to go even get those jobs. So you say, hey, we have jobs growth, right? We got this growth here, but the quality of the jobs are terrible. They're shit. The wages are not growing. You got to understand, wages are not going up. And I think I have some wage numbers. I haven't updated this yet, but really, I mean, wage numbers are, somewhere netting around here. All right. I mean, this is nothing. Okay. So when I update that, you guys will see that as well. But the wages, meaning that people are making more money. Are people making more money? What kind of jobs are we producing? You have people that's actually working multiple jobs. I didn't even post this here as well. But every time one man gets 2 or 3 jobs, then that's also added in the jobs growth numbers. Okay. Again, these numbers right here, that's what's added in there. So one person who works 2 to 3 jobs, and we're seeing record high levels, people working more jobs than ever. Right now, people are working more jobs. Okay. So all this growth, it's not good jobs. And so it's a quality in the numbers that you guys are missing when you're seeing the headlines. And I just wanted to just let you guys know. I want to show you the data, show you the numbers, show you what's going on. The quality of those jobs are terrible. Okay. And in fact, a lot of these jobs are actually government jobs. Okay. This is right now. A lot of these jobs are government jobs and seasonal jobs. Okay. This is fourth quarter. All right. So congratulations to you guys if you've been trading in the markets. You know what I'm saying? For this year, it's been a crazy volatile market, but we're in the fourth quarter. This is the last quarter. So a lot of the jobs that's being created are temporary jobs, because fourth quarter, they create holidays that makes people psychologically go get into debt and go spend money. Okay. So you got people out here that's going crazy over Christmas. I talked to this one guy last week. He was like, man, I go broke every Christmas, man. I'm getting ready to go broke right now. It's like, why are you going broke for a man-made holiday that's designed to get you to spend money so that the economy can grow? It's designed for you to spend money. Okay. So if you got the money, spend it, whatever. But if you don't have the money, it's ridiculous for you to go into debt just to try to make your kids happy or whatever the case may be for a temporary time. Okay. You need to practice better love habits than that. All right. So, but it's all designed for that. So because the expectation is that us people are going to go and spend money, well, you got some of the jobs being created right now are, for that, like temporary jobs. And then you got federal jobs, federal government jobs. They're not production jobs. Those are jobs that's paid for by taxpayers. So we want to look at what's productive. Who's selling? Are you selling? If you're not selling, then you're failing. Okay. So that's what it's all about. But the government has jobs that are financed by the taxpayers. So those don't count for productivity. Okay. That's the government. The government, we've seen last jobs numbers. They hired, I want to say over 30,000 people for the 2020 census. And those are temporary jobs. So you got to think they add those numbers in when they do the revision. They're going to have to take them back out, right? Because they're temporary. They're not real jobs. Okay. Yes, Arlington. A lot of the jobs. This past jobs report, majority of the jobs did come from the healthcare sector. However, those jobs are like medical assistants and stuff like that. I want to say that those jobs average maybe $25,000 a year salaries. Those are not good quality jobs, and people can't. I don't know where you guys live at, but I don't know of anybody who can really survive off of $25,000 a year. That's just, again, just to say you got a job just for the numbers, that's still not quality. So you got to understand the quality of what we're actually seeing. It's not good. Okay. So those are the key factors that drove the markets this week. I'll show you guys something else here real quick. Let me just scroll over here. All right. Consumer debt. All right. So here goes some other information here. This is you guys. This is us. All right. All of us out here. Now, this is 2008. You got to remember 2008. That was the Great Recession. OK, the greatest recession of our lifetime so far. But this next one is going to be worse. All right. So this was 2008. You see that number? You see that? All right, cool. This is where you are today. All right. Doesn't take a rocket scientist to understand this, but you're higher than you were in the last recession. Okay. this tells us that people are actually running up the check. But there's not a check. They're actually running up the credit cards. They're running up everything, okay? These numbers are bad. They're all divided in these colors here. You see, I got them all stacked up on each other. And they're expanding, okay? I don't know if these numbers are pretty small. I can, make this chart bigger, but we're going to just quickly go through it. But if you can see the breadth of the charts itself, like the student loan debt, right? If you look at the breadth of that, it's expanding. See how it's expanding? Okay. And so it shrinks and expands. We're seeing that it's expanding. So student loan debt is a major problem. Student loan debt is killing people, man. I'm telling you. And it matters because a lot of jobs are using it, everything, your insurance, all kinds of stuff. This stuff messes up your credit. Okay. Mortgage is always the biggest expense. You guys see, most people buying houses, that's most people's biggest expense is that mortgage, man. So it's a gift and a curse. All right. But this is all debt. And it's expanding. All the levels are higher than we saw in 2008. So when all that debt was that high, then we got that crash. All right. Boom. And then we started picking back up because the Fed started to lower the interest rates, which, influences people to go take out more credit, more debt. Gotcha. All right. So we saw that. Interesting thing here is that if you look at this blue data here in the mortgage origination, this is before the 2008 crisis. You see all these are low credit score people. Okay. So all the low credit score people were buying it up. They had no business buying it up, but they were buying it up. That was a lot of numbers. Okay. All this bad mortgage. This is what led to that recession. Then you see the numbers get repulsed down here real low, even to the day. So you may hear people will say, oh, we don't see risk of recession because they're looking at stuff like this where, they allocated the credits a little better. But still, even people with the highest credit scores, they have the most debt, which you want them to be able to do it because they should be able to service it, Now, when those jobs start laying off, then you're going to see this turn upside down. All right. Yeah. And so, all right, so cool. So we're looking at that. Home sales up just a tad bit. I do need to update this chart. I didn't update it properly here. The home sales were up right here. Auto sales dropped down to here. Okay. You kind of need more context on this home sales thing. You got to go back last year. These numbers are actually low. But the way I did this chart, I had to update it. So we're not going to pay much attention to that. But the auto sales is low. Home sales is actually lower than it should be. These are the store openings and closings. These are the amount of stores open. Actually, I'm not even too sure. I can't even remember, actually. But when I go back into my notes on it, I'll be able to let you know. So these numbers right here, store openings. If you look here, the color code is, let me just change this to red. All right. So red is this is the store openings. This is the Wall Street Jap Boys red. And then the Wall Street Jap Boys blue is store closures. Now these colors, these lines here are from last year. So the same thing, closures versus openings of last year. So you can see, just so you can make a real comparison. Okay. So if we're taking a look at last year's store closings for the whole year, okay, this is the maximum stores that were closed from last year. This line right here. And this is the maximum that was open last year. All right. So we're opening, if you see the red down here, we're opening about the same, amount of stores opening. However, the amount of stores that's being shut down have exceeded last year. And these are record high numbers. Okay. And I update this stuff, every week we get new numbers. I haven't updated them this past week. They're probably even higher. But we're seeing lots of layoffs. All right. So to see that more stores are closing than are opening, this is not a sign of a good economy. All right. When you have a good economy, you have more stores that's opening than you have that's closing. This is the way that is. All right. So I just wanted to help you guys so you can discern through, the bull. a lot of stuff is propaganda that you're seeing. Okay. So again, this is key information, key data that we're looking at. All right. And let me just put this up here because it's pretty much it. The PMI numbers, that was major. The jobs numbers, that were major as well. So let me actually close this and then we'll get to our handy dandy yield curve. All right. What's good? What's good? I see you guys on the Facebook side. If you like what you hear, make sure you share. Make sure you like, you know somebody who can benefit from this wisdom. Make sure you add them over here, so they can get this wisdom. I see you guys though. All right. What are we looking at right now? Okay. You've been hearing it all over the news. It's called the yield curve. This is the Wall Street Jack Boys yield curve. We man the data. Okay. That means that we take the data, we put it in charts so that you guys can understand what's going on. Can you discern what is being said in the financial markets, news media, and everything else? Okay. So about this chart, only thing you need to know, and all my members, all of our students know how this works. We got a whole 2-hour class that we actually have done so that you guys can understand how this works. All you need to understand is that the gray line is short-term yields, the blue line, long-term yields. The blue line is supposed to be over the gray lines, but whenever they touch each other, there is a recession that comes, okay? And this is the most accurate indicator of a recession ever. Ever. It's the most accurate indicator. Every time this happens, a recession follows 100% of the time. That was kind of hood. Y'all like that? All right. So every time these lines cross each other, a recession happens. 100% of the time. Okay. Recession. All right. This is where you are today. Okay. It doesn't take a rocket scientist to understand patterns. If you see these patterns here, okay, then you can logically deduce what the outcome is going to be. This is important for you to understand because, again, I released this article and I have a lot of pundits and trolls are showing up on the article that was posted for you guys to learn. And I actually discovered many people do not freaking read. I'm like, yo, how in the world are you deducing what you just came up with from my article when it has nothing to do with politics? Okay. So if you guys go on the Facebook side, you'll see what I'm talking about. Make sure you like the articles and leave a comment so that Facebook's algorithms can pick up good people like yourself and your fans and your friends and everybody else. Okay. So when we have a bunch of trolls, the algos kind of attract other trolls. And you guys know that I love debating. I'm trying to work on it. Wife is trying to help me with that. But y'all know we love debate. We got a whole debate group and everything. I debate. That's what I do, right? For fun. So I just go in there and troll the trolls. Okay. You have a lot of people that are upset about the news of a recession coming because they think that it is anti-Trump or that is anti-Republican or whatever, the political affiliation is. And I don't have any beef with Trump. Okay. But for those people who don't understand economics, again, I asked them to subscribe to the class and learn, okay, or actually read the article itself because all the valuable information is in there that you need to know, okay? So what you need to understand is that every time this happens, a recession follows, okay? That is going to happen. There is nothing that they can do to stop it. They're trying everything they can do to stop it. That's why you see these numbers start to fall because they're trying to catch the economy. Okay, they're trying to catch it before it actually breaks, but they can't do it. And now we're at a time in history that is super, super terrible because, again, under the Obama years, we had 0% interest rates. The Feds dropped it to 0%. Okay, but you got to understand they came from way up here at 5% to save the economy. And on average, if you look at these charts here, that's what you get every time. A good 5% is what it takes for the Feds to save the economy. We're at 0% here, and they don't have 5% to save the economy. This is where we are right now, 1.75. 1.75, that's their range, okay? From 2 to 1.75, okay? Wall Street is expecting the Feds to cut cut, cut. Okay. Trump is mad and he's beefing with the feds because he wants them to just drive that shit down now. But they're penny pinching. Okay. Now, one of the issues that Trump had with the Fed is that, again, this is the Obama years, 0%. Okay. This is how you grow an economy. You make the cost of borrowing money free. So everybody who understands the financial markets, they went and took out the credit and the debt that they need to grow their businesses. The problem with debt is not debt itself, is that consumers, regular everyday people like you and I, what we want to do is go and buy some J's or go shopping and stuff like that with the debt. But what corporations do, they take that debt to grow their business, and that business is going to service that debt, okay? And it was basically damn near free. When Trump got into office, the Feds raised the interest rates because they wanted to cool the economy off, okay? Because they wanted to cool the economy off to save you guys from wrecking the economy from inflation, okay? Because all this credit is put into the system. Not only did they drop interest rates to zero, but they actually interfered with the free market. They bought up stocks. They bought up real estate. They bought up all these different assets to drive the prices up. And this is what you guys see the wealth gap expanding, and people don't understand. You got people talking about all kind of stuff that don't have anything to do with this economy today. This is the reason why the economy, this is why you have the wealth gap, because the feds create it. They inflate, they create inflation, okay? When they create the inflation, this is how they do it. They drop interest rates that get people taking out credit and spending money. When people spend money, when people get free money or credit, they spend it. That's what you do psychologically. So again, economics is not just money, but it's also psychology, okay? You could divide the economy between spenders and savers. That's all we are. You're either spending or you're saving, okay? And that goes for, citizens and corporations and governments. All of that, okay? And we go through phases, these cycles, when we're saving and then we're spending. So that's what we're seeing. We had this long expansion. Now, pay attention to every time there was a recession in the past, the Feds only kept interest rates low for about 2 years. And this is 30 years of data. We can even go back even further. They only have about 2 years that they keep it low. The Feds kept interest rates for some odd reason. All right, I say it's odd reason, but we know why. Because they couldn't create the inflation that they needed. They had this 2% target. They couldn't create it, and they still can't create it. All right. But this is the longest, monetary policy ever. Okay. Ever. And the economy is where it's at now, which is super weak. All right. It did not do the job. And they started raising rates really fast, really hard. And then the economy started tanking. Stock market started selling off last December. Shit got bad, real bad. I mean, they almost wrecked the whole economy. And they did that, and now they're quickly cutting because they're trying to save it. So you got to understand, this is 2020 election year, very pivotal year. I try not to get into politics as much, but some things we can't avoid when it comes to the markets because some geopolitical information shapes the markets. Okay. And so that's what we're looking at. We're seeing all this geopolitical stuff that's, shaping the markets because it's 2020 election season. Trump needs a good economy so that he can win 2020. This is a really bad risk. And a couple of Democrats like Elizabeth Warren has actually tapped into, some of us, I don't know whose video she done tapped into, but she done got a whiff of this. And she's like, recession is coming. Okay. And so because some of the Democrats like Elizabeth Warren is saying that a recession is coming, you got some people that are upset with my posts because I'm just trying to simply warn you that you need to start saving money, okay, right now. That's what I'm trying to warn those who want to know what you need to be doing with your money. You need to be saving right now because a storm is coming. But you have some Democrats out there that's actually, they're saying, it's recession coming and it's Trump's fault. So that makes it's a different kind of spin. And I need to let you guys know this recession is coming. It don't matter who's in office right now, okay? But, this is political warfare. And so any kind of information and data, this is the fight for power. All powers are going to take whatever information they can, spin it off to the public so they can win the votes. I mean, that's what it's all about. When you're dealing with economics, we come from a non-political perspective. It doesn't matter. What we're seeing is the free markets and the Feds. Okay, again, short-term rates, that's what the Feds control. long-term rates, this is the free markets. When we see these things collide, recession happens every time. Every single time. All right. And so I stand firm in my position. It doesn't mean that the stock market is not going to rally. We're seeing a lot of manipulation in the stock market. In fact, the stock market always hit these new highs before it starts crashing. But the stock market is not the economy. So anyway, I just want to show you guys where we are so that you understand macro view, you understand top level view. And this is what normally shapes my ideas for trading, because I need to understand where I am at. And I've been a bull for all these years. This is the bearest I've ever been because of the data that we're seeing. Again, 100% of the time this is the most accurate indicator in the whole world. Every time the gray line crosses the blue line, when they touch, okay, that's called an inversion. A recession happens 100% of the time. So you can logically deduce what the outcome is going to be, and you don't need to be a rocket scientist or an economist. All right. So anyhow, that's what we're looking at. With that, let me take that off of here. Bingo. Here we go. In the stock market world. Okay. Oh, and another thing you got to understand is that I was just talking to you guys about the wealth gap. Okay, quickly here. I'm going to just go over with you real quick. I was just talking to you guys about the wealth gap. The wealth gap is expanded, meaning that the rich is getting richer and the poor is getting poorer. And the feds conducted this research to figure out, are they really the culprit? And they concluded that they are the reason why there's a wealth gap, but they argued that they can't stop it. So they are the creators of the wealth gap, but they can't stop it because, again, the information is freely available for everybody, but who's paying attention? You're in the matrix. Everything is designed for you to be stuck in euphoria. You're living a good life, okay? If you look around you, it's chaos. If you look in Hong Kong, the whole city was shut down. This past week, a kid got shot. By a police officer. They've been rioting, for the longest, and people wearing masks and tearing up the whole city. They had to shut down the subways. Chaos over there. Look at Venezuela. Okay, they money. Imagine trying to go get your money and go shopping, and it's worthless. You can't buy nothing. This is terrible. So you do hear them talk about, well, you see Trump, well, we got the greatest economy. Yeah, we do. However, the whole world economy is in shit right now. Europe, Germany is like damn near in a recession right now. Everything is looking bad, and everybody's like pleading with Trump and President Xi to stop the tariff wars because it's hurting everybody. But you got to remember, we do trade with everybody. You got to think, all the stuff that's in your house, shit ain't made in America. Where do you get the stuff that's in your house? You got to think, stuff you get in your house is from different countries. Because we sold America's manufacturing jobs over to China, okay, years ago. Okay, this is way before Trump was been in office. Now, this is why people voted for Trump, because Trump said, we're going to bring them jobs back, okay, because that's what made the middle class. But we gave all those to China. And to be honest, we're not going to get them back. All right. So with that being said, there's a push from, this current administration to strong arm and put a strong arm around China, because China is growing so fast. China is new money right now. All the big dog investors love investing in China. China is the place to be. They don't have all the regulations that we got here. You have a president that don't have, it's not a bipartisanism over there. It's whatever he say, that's what's going to go. So when they want to get something popping, you don't have to go through Democrats and Republicans. You just go do it so they can get shit done much faster there. And that's why they outpace us with technology and all this other stuff. So when you see us trying to slow them down with, putting brakes, regulations and tariffs on Huawei, there are Chinese telecom companies and technology companies banning them. And that's another thing that had the market shook from the previous week. The end of the previous week, there was talks of this current administration discussing ways to stop China. And one of those things was to actually delist them on the American stock chain, the U.S. stock exchange. We talked about this last week, where I was telling you guys, I actually watched a video interview with Mark Cuban from the Shark Tank. He's a really bright guy. But he was saying how, him and Trump don't really get along, but he actually said they actually get along. He just don't agree with his politics and certain things. But he said he does agree with Trump on a trade war. But he don't like his method, which is putting tariffs on, because tariffs, what happened is the corporations, they pass it back on to us. And I think that the idea that Trump has is to put the pressure on the corporations. He's trying to, look out for them, but they're not doing the right thing. They're not investing back into the people. And I just don't think that is working out. We can see through the numbers, it's just not working out. But anyhow, we see that China, what he was saying is that if he really want to do damage to China, then you need to stop their investing on the U.S. stock exchange, because this is where they get all their money from the U.S. stock exchange. When we trade Alibaba and all these other companies, this is on our stock exchange, and our companies can't list on their stock exchange like that. I mean, it's crazy. So anyhow, that was an interview I believe he did maybe a year ago or so, but the administration actually are talking about doing that now. And that is going to have some major implications here in the stock market world. That's a great risk because, again, the big investors, they love, China, because that's again, that's where you get all the cheap goods, you get it fast and everything else. So anyhow, that's what's going on with that. And so, yeah, as I was telling you guys about the wealth gap, the situation with that, the reason I wanted to bring that up is because I went to the movies this week and I watched the opening of The Joker. Okay, it's a movie. I'm not going to spoil it for you guys, but most people thinking about the movie Joker, you're thinking about Batman, action, and it's not even an action movie. It's a character building movie. I believe they're going to win an Oscar for it. It's a phenomenal movie. The reason why I think that it's phenomenal, besides the story writing and besides the acting, which is phenomenal, is that it was shot in the old settings, but all the things that were occurring are all relevant to all the things that we're seeing today, like actually live, like right now. So when we went to the theater, and the wife went to the theater, there were police surrounding the theater. It was like, yo, what's going on? Police all out in the parking lot, police all up in the theater. Couldn't really figure it out. We had a good time watching the movie. It was good. No issues. Police greeted us as we leave out the door and everything, make sure everybody's safe. And so we got some news reports of people were saying how they were afraid of the implications of this movie, the impact that it's going to have on the psychology of the masses. And again, trying to say this without spoiling the movie for you guys, but the movie is very relevant to what we're seeing right now. And it's pretty much about the wealth gap. I mean, you guys don't understand. I talked to you guys about Granddaddy Dalio, okay, big dog. I know y'all know Warren Buffett, but you need to know who Granddaddy Dalio is. The biggest hedge fund manager in the world, managing billions of dollars. There's all the big billionaires. Let this guy manage their money. He's been doing this longer than I've been alive. This guy actually has gone through history. He had all his tech, smart genius people to put together the environment to replicate the markets back then. He actually traded based off of the news and all this other stuff in those markets, like a simulated world, as the events were happening and coming. He's done this several times. And what he discovered, he put together in the blueprint. I don't even think I have. In fact, I'll show you guys my book real quick so you can get it. See. Okay. And again, I'll be plugging this to you guys. This is everything that he learned. It's in this book right here. He actually gives this away for free. If you go to the website, you want to get the PDFs. Me, I got to have the hard copy. I got a library I like to fill up. But you learn so much in this that he put together. And again, he's getting ready. He's over 70. I think he's on his way out. And he talks about this as his contribution to humanity and society before he leaves. He wants to let us know all the things that he used at Bridgewater, which is, again, the biggest fund manager, the biggest fund in the world. He wants us to have the insight of everything that he learned and what he did to make this company successful. Okay. So he's talking about the biggest dog of them all. Okay. And he put this together so that we can learn. And I've been reading it and I read it over and over again. It is really good. It's a little nerdy. So if you're not on the nerd thing, or if you don't have, again, I recommend this for my advanced traders. You guys that's already, trading in the markets, you're a little more advanced than, the newbies. And then this is a good book for you to dive in. If you're not, then you're not going to really understand what's going on in this book, so you can navigate the markets. So in the book, and in his interviews and everything else, he talks about, the wealth gap. It's a big issue. Now you got to understand, this guy's a billionaire. He's not the only one. It's several other billionaires, fund managers that are afraid of the implications of a wealth gap. That when the economy goes through this next recession, it's going to be a war against the haves and the have-nots. Okay, because when people are losing their jobs, can't get anything, they blame the rich. And the rich are saying, hey, man, it's not us, man. It's the feds. Like, this is what these guys are saying. They don't want people destroying their houses, destroying their businesses and everything. So this guy, he just want to put it out there. He actually put it out for free. You know what I'm saying? I bought the physical book. That's how I am. But you guys go to his website and get it for free and study it. You know what I'm saying? I study. Okay. And he has insight that I could never come up with. And none of us can come up with our own because you don't have the means. This guy's a multi-billionaire. He can put together the team that can build this. It's called Big Debt Crisis. Ray Dalio. I call him Granddaddy Dalio. We call Warren Buffett Uncle Buffett. Now, it's a 3-book series. It's like, it's a lot of data, a lot of information in there. And again, he talks about we're at a time in this cycle that looks exactly like the 1930s. What was going on in the 1930s? Well, that's the Great Depression. Okay, that was and again, 2008 was a depression too. We never even fully recovered from it, but they stopped using the term depression because of the psychological impact that it has on the masses. They don't like that word terminology. So again, he's believing, and other people are believing, that we're entering into a Great Depression because the feds can't stop this. The feds only have 2% interest rates to save the economy, to attempt to try to save the economy. And the stock market, they want it right now. And so, again, we are like, I think about 90% probability of a rate cut the end of this month. The last 2 days of this month, the Feds will be meeting. And because of this weak data that we're seeing in the manufacturing world, that the consensus, Fed watch tool and everything we have is telling us that the Feds are going to cut rates the end of this month. And that's supposed to be good for the stock market world. And so that's why we saw the rally the end of Friday. We saw the stock markets rally from those weak job numbers because the job numbers are weak. And so that should influence the Fed's decision to step in to assist this strong economy. Again, if the economy is strong, you don't need the Feds to cut interest rates. They need to be raising interest rates. When they're cutting, it's because it's weak, because you don't need stimulus if it's strong, but you do. So anyhow, anyway, I was going to try to see if I can show you guys, because some of the charts, here we go. Some of the charts you can't find online, but Granddaddy Dalio has them. I'll show you guys this real quick, just so you can kind of see it a little bit. But this chart here, if you guys can kind of see it, trying to show you guys for 1930, you see those rates. Maybe I should just zoom in to 1930 so you can see it. You can't find these charts online, man. And so, but his book, he has it. And you can see what happened. They dropped the interest rates down that low. Here we go. Okay. But this time they don't have enough space to cut those interest rates. And the geopolitical scene and everything else is all the same. All the stars are in alignment. Okay. You got the left versus the right tension. That was what was going on during this time. Everything that he learned, we're seeing now. He's like, yo, it's the classical cycle. We already know how the story ends. We've seen it before throughout history. I mean, this guy, he studies way back to ancient Roman civilizations and all that stuff. So he's talking about all of that, you know, but these are cycles. They're over and over. So again, that's what we're seeing. So the wealth gap, he talks about tremendously, because that's something that is a major issue during depressions. You know, people point and blame the fingers to the wealthy. People feel left out. You know, people get mad at the jobs, start shooting up jobs, going crazy. They don't want that to happen. So he's trying to put the word out there like, yo, you know, it's not me, man. I just know the financial markets and I'll use that information to make money. But they don't teach you all this in school. They don't teach people this stuff in school. So how did you know? The schools are freaking rigged. They train you to go be a slave. I mean, this is what it is. Okay. So just because somebody got a degree, it means nothing. If you don't understand how the money runs the world. So that's what I'm trying to show you guys now. This is what it's all about. So anyway, the wealth gap situation is interesting. They have it over in Hong Kong as well. But that Joker movie, that's what it's about. And it gets crazy. And I'm just almost, because I can't tell you all the movie. I don't want to spoil it. But it's about, you know, chaos from the wealth gap. And People with masks and all that, but that's happening in Hong Kong right now. I just think that that's crazy because Hollywood normally give us insight into the future or they create these events, but it's crazy that that's happening right now today. And the movie just came out. They actually banned face masks in Hong Kong. All right. Everything that's happening in Hong Kong is happening in actually the movie Joker. So anyway, check that movie out if y'all get the chance. You definitely are going to find it very interesting. All right. So enough of the market talk. Let's take a look here in the stock market world. What is going on? All right. So this is what's going on. Double tops, flops is what Topaz, she always says, double tops, flops. Oh, that's what we got here. Okay. We had boom. Then we caught back up to this level. We got rejected. Okay. So the market is chopping. We're just really in a distribution zone. Okay. So this distribution zone is really interesting because I believe that it's going to continue to chop. It's a very volatile environment right now. Again, the economic data points to the downside, but we got earnings season coming up and it's not going to be good. Okay. The reason why it's been good for these past months is because the tax cuts that Trump gave these corporations. That's the reason why those numbers have been good. But those numbers have ran out. So they're out of juice. They need the feds and they need Trump to do some kind of fiscal policy stuff that's going on. Oh, another thing is that this time around, they're talking about the feds are going to try to, or the government is going to actually try to put money directly into the hands of consumers because they have to try to get people spending to try to save the economy from falling off. Ray Dalio talks about this. I'll show you guys. If you check his LinkedIn post, he posts so much value there for free. Man, it's crazy, yo. But he goes through all of that, let you guys know what tools that they have at their disposal. What can they do? What are they going to do? How should it play out? Now, there's a small probability that it will not play out that way, but it's highly unlikely. Again, we've seen 100% of the times, this is the way it plays out. So just keep that in mind. But when I'm looking at the markets here, the futures are down slightly right now. Let me go to yellow. Okay. There we go. So the futures are slightly down right now. You guys can see NASDAQ cutting down a little bit. Russell's cutting down a little bit. Again, we saw that rally. That was a fake out. Market is choppy. This is more of a day trader's market right now. So going into this week, I believe that you should be patient for some setups to actually come into play. Let me dial in on the intraday charts. Okay. So you just guys see my Fibonacci levels. They've been here on the charts. Been here on the charts. And the markets behave to our Fibonacci levels and our moving average levels like clockwork. Okay. I'm not a psychic, I'm good at what I do. My students, you guys should be good at it because, again, this is what we teach. Again, if you want to learn this stuff, sign up for the classes at wallstreetjackboys.com. But you see this level here, this 618 retracement, the markets fell all the way down perfectly, zapped through, shot back up. Now, then it's going up to a key level of resistance, which we got this cluster of Fibonacci levels. And also, you have, I don't know why that's flashing. You also have that moving average there. Okay. And so we're looking at a rejection here. They hit that top. Okay. So they ran it up. They ran it up at this top and then they take profits. Now we're seeing it come down a little bit. So that's what's happening live right now. It's coming down a little bit. And so I think that the markets are just going to pretty much move sideways. They're going to try to find a way to rally this week. They always do. Once too many people go bearish, then the markets has this thing of switching the opposite way to strip out money from, the traders. So it's a tricky environment. Try not to hold on to trades for, over 4 days or what have you, because it's going to be tricky. It's going to be tricky this week. So just keep that in mind. That's something that we're looking at. Let me just actually take a look at, if you guys are looking at my sector view, I got XLP. XLP, which is actually in the squeeze. So what I'm going to do is actually go to a daily chart. And if there's any bullish moves happening in the markets, I would like to take on that risk here in this sector. All right. I like to take on that risk here in this sector. We have, the trend is going up. Okay. We have a squeeze that has to pop. That squeeze has to fire long. We have the momentum shifting up. We have a buy trigger that says get in. Okay. And so with that, we have this super long candlestick. We'll see how it plays out come tomorrow. If it pulls back, that's good, because then that'll allow us to get into a better position. So we'll just wait. I'll see how it plays out tomorrow and then try to get into it maybe Tuesday or ride to the upside. Okay, so this is your consumer staples. All right, this is like your McDonald's and your Walmarts and everything like that. So these are sectors that I'll be looking into this week. Also, taking a look back here at utilities. Utilities is a safety proxy here. This is where investors throw in their money here when there's uncertainty in the markets. Normally they do bonds and they do gold. And it could be time for those to come back now also. But, XLU, this sector, utilities, we saw that they rallied here on Friday. That was a really nice rally. This bounce dropped down here to this level. We've seen it bounce back up here to these tops. And so I have reason to believe that will continue. XLK is in a squeeze, but I don't really like it right now. I think that it's overbought. It is reversing, but it's still a little tricky. As you see that it's still sloping down. I mean, this is one of the best performers of the year. Let me pull that out. Come on. Oh, you're not going to give it that. There we go. I mean, you can still see that it's, still, going in that kind of distribution. I think that it may be choppy. Okay. But the market is real close to hitting the new highs, and it didn't hit the new highs. It failed to hit those new highs. And so I think that's going to continue to chop around. Let's just take a look at how gold is performing real quick. And then take a look at some stuff from you guys. I'm sorry. Let me look at that. All right. Hope you guys are really enjoying this information that we're giving. If so, give me a thumbs up. All right. So gold is in a squeeze also. So we're definitely going to keep our eyes on gold. I think that gold is probably ready for another breakout. This could be, look at that. You see that arrow just pop up literally while we're talking. Literally while we're talking, that arrow just popped on the screen. When you guys catch the replay, you'll see it. It's coming in and coming out, giving us a buy trigger. But we could be looking at a potential double bottom setup in here where it can kind of do this kind of number. Okay. But what we see is that we have a squeeze that's in place, and that squeeze got to fire. Which direction is going to fire? I believe it's going to fire long. Any bad news, further bad news in the markets, then we're going to see gold rally back up. Any further bad news. So I'm looking for any bad news coming up that the markets don't like. Investors will start piling back up in gold. $1,500 is pretty good. They did try to get it cheaper. They did run it down here to $1,475, which is a good buy point. But gold is definitely really good. So I'll be paying attention to that. On any bad news, I'll be looking for some gold plays. Bonds, let me see. Bonds. Let me just look at TLT for it. And bonds is already headed in that direction. All right. Bonds is already, and it's a kind of similar pattern, actually, if you look at it. All right. Bonds is actually headed up. Now, when bond prices go up, the yield continues to go down. We just looked at the yield curve. And so you guys see what's going on with that yield curve. But bonds go up, the markets go down. Okay, that's the way it normally plays out. Right now, we see that the bonds are up. We see that the markets are down currently as we speak. So I believe that the bonds have some more room to go as yields continue to drive down on fears of a recession. We'll see how it plays out this week, but that's the game plan. So north on bonds. What else? Let me take a look at oil. Now, this is a tricky thing because oil is a key indicator for inflation. And, we tracked oil a while back, and Oil reached its top before it sold off, and then it had a sharp breakdown to the south. Let's get this together. What's good, everybody? All right, so we had a look at oil here, and oil, as you see, I hit my levels pretty sharp. Was able to call oil like that. This consolidation here, they did get the gap up from here to here, which was on the drone attack on the oil reserves in Saudi that made that pop up, and then we've seen it dwindle all the way down. This is a sharp sell-off. This is a real sharp. It looks like kind of like this before it rallies back up. Okay, I believe that oil is probably finished selling off, and that we should start to see it rally back up, similar to what it did back there in the past. We'll see how it plays out. But right now, your gas should be pretty cheap right now at the pumps, and this is the reason why. Because you had oil drop from 63 all the way down to 52. It's almost 10 points. So that's good for consumers, which helps out with inflation, which is pretty bad for the feds because the feds are trying to create inflation and they can't seem to get up to the 2% rate. And even though they don't include energy and they don't include food, so this still makes it a little challenging because they're not seeing it and they're going to continue to cut rates. And that's just the consensus right now. That's just what they're going to do. They're going to cut rates anyway. So that's an interesting thing, development there. I don't see any trade setups in oil just yet, but I will be watching these broader markets coming this week to get a feel and get a sense of direction as far as that goes. Other than that, man, I'll take some setups from you guys. Anything y'all want to look at, Ashley, Mia, Ron, Mark, Arlington, Stanley, Topaz, all you guys. If you want to take a look at anything, let me know. We'll pull that up and look at it right now. If not, then we'll actually, go ahead and prepare for a closing on this session. It's been long enough, over an hour long. Juicy information, lots of good information that we had to actually go over. So, all right, I see you guys. I'm letting you know that I see you. All right. Mendelez, let's go another hour. Ron said he want to go another hour, man. See, that's what I like. You got people that's hungry out here, man. Some people just ain't hungry enough, man. They want to go watch the games. We out here trying to make money and understand what's going on with our money. All right, let's take a look at this. OG Ron. All right, Ron. I actually kind of like this chart right here. Let me take it. Fibonacci swing from that high to that low. We saw that it did come back to this line from the last time. Man, I like this setup, Ron. So basically this setup, it's a pattern. This is a double bottom pattern that we're looking at clearly. It's kind of like a W. Okay, you guys see the floors are here. The floors have been established. We can see that clearly at the 100 moving averages. Okay. As it swings down, it swings up to 618, it swings back down, and then we just got that buy trigger right there as it swings up. And so we have reason to believe that it should at least hit to these next highs before it breaks, up to the higher highs. We do have a buy trigger. We have momentum that's shifting up. We have a squeeze that's forming, so it could chop a little bit, since the squeeze is there. The trend is really not really giving us much information there, but definitely at the 786, the levels that it's at right now, which is here, 786, it may chop around a little bit since it's forming into that squeeze, but I do like it to the upside. So if I was to play this one with volatility being a little up, I would be actually looking for some kind of credit spread so that you can you can take the choppiness just in case it chops around. Playing it super strong with a long call could hurt you really bad if this thing doesn't fire off immediately. And it's a fresh squeeze, and so the squeeze normally consolidates for maybe 8 sessions or so before it fires long. So I would actually look at doing something like a credit spread on this one. Okay. Oh, Mia so much she want to play Build Your Stacks. Man, listen, I told you guys, if y'all want to do another Build Your Stacks game session, another game night, let me know, and then we'll schedule something. Let's try to get as many participants as we possibly can. The game is phenomenal. If you guys didn't catch us playing that game live, let us know, and I'll send you guys the link for the videos and catch the playback. Very, very valuable game. But again, I'm looking at doing stuff for you guys. If you give me feedback, I don't know what you do. I just do what I do. Again, when I took Game Plan Sundays away, because I was like, I don't think people paying attention or listening, or even looking at this. Not many subscribers are joining. This is the most valuable. This is the most valuable piece of the training, is actually understanding the thought process of a real trader, of a guru. That's the value that I got from my mentors, is understanding how they think. How do they critically make decisions? You guys are actually seeing that in these Game Plan Sunday sessions. And to be honest with you, man, everybody, these gurus are charging over $200 a month to get this kind of level of information. They don't even go in a quarter of the debt that I go into on this type of information. This is very valuable, and I should be charging a fee for it, to be honest. But what we want to do is actually get you guys this value, because I think that it's going to be life-saving, man. Really, I think that this is life-saving. If you can change your trajectory right now, if you knew that a recession is coming around the corner, then you know that you need to be saving money. That stuff that you was going to buy, you was going to get into some debt, it is not the time to do that. You was going to go buy that house. You're going to do whatever you're going to do. There's a cycle. There's a buyer's market and a seller's market. You don't want to get caught at the wrong time. You can have the right asset class at the wrong time, and it becomes a nightmare. So it's important that you understand that. And so it doesn't matter where you work at, because the financial markets impact everybody. Doesn't matter what job you're at. Everything has to answer to Wall Street. So anyway, y'all keep the feedback. Let me know. You want to do the Bill Your Stack session. Even let me know like what times work for you guys. I just go off of what works for me, but I would like to cater to you guys more. Because again, if it's not valuable to you, then what's the point of doing it? We'll try to do our sessions around 7 o'clock at night. I think that's a good time. If you guys don't like that time, let me know what's a better time you think that we should do our sessions. You want to do the Bill Your Stack sessions? We'll do that. We'll do it live. Let me know what days work for you guys. Y'all want to do Mondays, Tuesdays, Wednesdays, Thursday, Friday, Saturday, Sunday. No, that song anyway. But anyway, just let me know what y'all want to do. And, I love to be able to bring it back. Super awesome thing there. Any questions, anything that y'all had questions on before I bring the session to a close? I open the floor for you guys if you have any questions. Anybody got any questions? Speak now or forever hold your peace. Speak now or forever hold your peace. ATVI before we go. Okay. All right. Good. And I'm telling you, man, people are paying lots of money, and you can't talk to a guru the way that you can come in here and talk to me and the crew, Wall Street Jack Boys. We live, man. Again, you paid $5,000 and you can't even talk to this guru that's out here. Again, people are spending crazy money to learn this stuff. Okay, man, this setup right here is actually, I like this setup right here in ATVI. Actually been looking at it. As you see, I already have my Fibonacci set up on it. OG Ron came through with this setup here. We're at that low, and we see that it's the momentum is shifting. We saw that the little one dot squeeze went short, and now it's retracing, it's bouncing back this way. We don't have any participation from the trend yet, but at this low, this is a good buy at that low. And we have came above our 618 retracement. So I do like this to the upside. All right. What else we got? I do like that to the upside. So thanks, Ron, for that. I think that's a good setup. If the markets are going to move north, I would like to play that. FCAU. What is this? Fiat Chrysler. Well, again, you guys know the news. It's been pretty bad for these automakers, as they have, the union strikes. They are trying to find terms on these unions. People want more pay, whatever demands that they have. It's just not good. Do I see any setups here? I don't see anything that I like. I do know that this chart here is bearish. So again, this is a bearish chart setup. The sell-off is pretty drastic. I do believe that. And looking at here, we're looking at oversold conditions. Okay. So what you can possibly do on this one is to play it when it's oversold like this. We like to play it to the reverse side. Okay. Like this, catch it. when we get a aim, we got an aim here, strong aim signal that says to go back, and you can catch it, as a counter trend trade. So it'll be something like if it bottoms out here like this, then you can catch it up to the mean. Now, a couple points there, but again, it's oversold. Counter trend setup could work out if you're looking at it. Ugly setup for me. It's a cheap stock. It's only $12, so maybe you may consider doing the stock itself. I'm not too sure, but it's nothing that I would want to be a part of, especially with auto sales actually going down. Actually, the auto industry is not looking good. All right. I was taking a look at Costco before the red futures, but the chart looks good. We also took a look at AMT, which is in real estate. Real estate is in the squeeze, and usually real estate performs okay when broader markets fall, I think. Dustin, my man, okay, I see. I see you just jumped in a little late here. We got to get in here on time, man. But Costco, as we went over earlier, the consumer staples, I do like that that sector. We went over earlier, looking at some exposure in there. We talked about this last week, Dustin. As you remember, I believe you actually called out the consumer staples list in Game Plan Sunday session, which is good. There was that sharp sell-off that zapped a lot of money out of the markets, and then it had a strong reverse back. This is kind of seen throughout that sector, but since they ripped all of that long money out, and they are able to get back, they got back in at these lows, and you see these algos, these sharp candles. Now they're going back. We were in a squeeze, we saw it. People were riding the wave. It never fired off, and then it got ripped from you. Right, so some people lost some money in this sector because of that, and now that they ripped all that money out, they scared it all out. Now it's time to get in. So, squeeze setup again. The stars are in alignment. We're above the 618 retracement. Like to see it come up to about 62.5. I think that's from this swing low to this level here. It's about 62.36 or somewhere about 62.5 as I would actually take it. I think I put the wrong one. It's actually from this swing to this one, so 62.5. That'll be a first target. If we do get any other boosts, it can go up there. I doubt we see that high, but who knows? We'll see. Sorry you was on Facebook. So, okay, yeah. See, hey, man, whatever side you guys on, that's fine. Just so you know, with the platform for you guys that use the Click Meeting platform that we have, we pay premium dollars to get you guys the best experience for this platform, which is pretty awesome. But they did a new update where you don't have to have the app to actually join the webinar live session from your phone or computers, what have you. All you have to do is click on the link, and you can actually join from the web browser itself. So it's just a more convenient way for you guys to join the sessions in the chat room versus the Facebook. The Facebook side, you got charts. The way they do it, you guys can't see the full charts. And so, the best experience, I would, prefer for you guys to join this platform. That's what we pay for it for. Okay. So anyhow, with that being said, I guess we'll go ahead and bring the session to a close. AMT. Let me just pull that up real quick. Excuse me. One more. And this is based off of the real estate sector, continuing to move high. And the real estate sector is actually super high. It's actually the best performer of the year. I do like this setup that you got here. Let me get some new levels on here for you guys. Wow, they did the levels there. But basically what we're looking at is one of those, double bottom setups here. I'm going to take out Fibonacci levels just like that. And you got to keep in mind, though, this hurdle is above. So I would like, again, 5-point move up here would be the first target. And there's a possibility we can come up to 250. That's really optimistic. Again, we do have a buy trigger to the long side, but the sector itself may be overbought. Let me just check it out real quick. But I do like it to the long side, Dustin, just so you know. Hope you like the levels there. Okay. All right. So we got those levels. All right. We're going to take this swing high from that low. We do have the same exact pattern This is on the sector itself. The real estate stocks, they're not as liquid, and the spreads on those are pretty wide. So you just got to pay attention to the spreads on them. I normally don't trade these as much because the spreads, they normally be a little wide. So just before you get your setups, make sure you check those out. But yeah, again, squeeze, set up in there, upwards momentum, buy trigger. Trend is not participating yet, but the key obstacle is the 618. It needs to clear up to this side here. That'll be this target here, and then all the way up. All right. So that's where we could see real estate go. All right. Cool. Well, I appreciate you guys joining for the session. And y'all give me feedback. Let me know what you want to do. Hey, listen, we just hit over 900 likes on the Facebook page side. So make sure you guys, if you already haven't done that, make sure you go to the Facebook business page and make sure that you hit the like button, leave a review, leave your remarks or what have you. It actually looks pretty good. When you guys do that, it helps the algorithms on Facebook when other people help our business, Wall Street Jack Boys, populate higher in the feeds when people are looking for this kind of information. If you go to, let's see if I can pull it up here. But if you guys go in here, I'll show you real quick and then we'll go ahead and close it. Let's pull it up right there. Okay. When you guys go to the page, okay, what you want to do is make sure that you also, because again, I know I normally do it from my private page, the webinars, but I want to start doing them more from the business page. Okay. You guys hit the like button, then, you'll also follow the page. But when we go live, you need to get these notifications. When we post articles, you need to get the notifications. So what you need to do is go here where I'm highlighting following. And then you want to let Facebook know, because Facebook will actually do it the way they want to. They turn it off. You want to actually check see first. And then you want to turn on posts. So whenever we post, because again, we don't post bullshit. We post stuff that's relevant for you guys in the markets to protect your investments and to make money. So again, your timeline will thank you. But make sure you select this so that you get the notifications. I do a lot of work. We're getting emails out, writing blogs, trading. I do a lot of work. Trust and believe me. And so sometimes some stuff just skips. I just don't even have time to do it. And I would like to send out the emails out all the time. But you guys got to read them. You got to, if you're not reading them, it's a waste of my time. And but if you just simply do this, you'll get the notifications. That's why we sync it on Facebook, because most people on Facebook checking your friends and family. It's just an easy platform. You're already on there anyway. Okay, so just turn on these notifications. Make sure you get these notifications. Just go here on the following on the homepage, and then select see first so that your timeline will show you whenever we post. It'll show up first in your timeline, and then hit on so that you do get the notifications when we do post them. And you guys can share from here as well. Any posters on here you can actually share. I know when I post, sometimes Facebook don't allow you guys to share my posts, but you can share from this when I post. You can share from the group. But anyhow, you guys have a wonderful night. We'll catch up in the markets tomorrow. Y'all have a good night. Peace.